Good morning, guys. It's Renae Anderson here, and it's Mortgage Monday. I'm here once again with Jeff Lancaster with W.J. Bradley. Good morning, Jeff.
Good morning, Renae.
So today we're going to talk about the mortgage loan process. Last week you mentioned to us that there were documentation that we needed in order to begin the process of getting a loan. Can you tell me what that process is?
Yeah, there's a few different steps. There's pre-qualification, then we move to pre-approval, and then we move to actual contract loan application.
Awesome. Can you explain the pre-qualification process to us?
Sure. The way I handle my pre-qualification process with my clients, I have them submit their information online via our secure website. And by information, I'm referring to employment, income, and asset information, along with authorization to pull credit.
Okay.
Based on the information they submit and the credit report review, at that point I make the determination if we're able to get them qualified for financing. And assuming that all those things pan out, I'll put a letter of qualification together on the borrower's behalf and send that to the real estate agent, to you, and also to the borrower.
Great, thank you. Okay, so can you explain the pre-approval letter to us?
Sure. Pre-approval varies from pre-qualification in the fact that the information that was submitted in the pre-qualification process is now confirmed or verified.
Okay.
In terms of, we will ask for 30 days worth of pay stubs, last 2 years W-2s, last 2 years tax returns, as well as most recent asset account statements, just so that we can verify that the employment, income, and asset information provided in the pre-qualification process is legitimate. If a borrower says they make X amount of dollars per month, we want to verify that with pay stubs, W-2s, and tax returns.
Gotcha.
If a borrower says they have X amount of dollars available for closing, for down payment and closing costs, we want to verify that with most recent asset statements.
Perfect. So let's talk about being under contract. Basically, the process goes through, and as the buyer is doing their due diligence with the lender, we're also very involved in finding you a home. So once you've found a home, the perfect home, you're going to get under contract on that property, and then you start the loan application.
Correct.
And explain that to me.
Yeah, once a borrower is under contract, if we've gone through the pre-qualification and pre-approval process the way we've just talked about, at that point I probably have, as the lender, probably 80 to 90% of the documentation that I'm going to need from the borrower.
Awesome.
At that point, we're just waiting on the borrower to secure a property
Okay.
to get under contract for a purchase. At that point, they will submit a formal loan application, sign and date that, the required disclosures that every lender is going to have,
Right.
and then depending on, each borrower is different, so that list is not all inclusive. Some borrowers may need to provide additional documentation. Some examples might be if there was a previous marriage, we would need a copy of the divorce decree. If their pre-qualification or pre-approval is contingent upon the sale of a current home, we would need proof of that sale.
That's good.
Those types of things. So
Okay.
while that list isn't everything, there are certainly it's certainly possible that other documentation may be required.
All right, guys, we're going to do the mortgage update now, again with Jeff Lancaster. What are the interest rates this week, Jeff?
Interest rates are holding steady, same where we were last week. Our 30-year fix for FHA and VA government loans still 3.75, and for the conforming conventional loans, we're still at 4.25.
Great. And what about anything new in the real estate or in the mortgage market?
Nothing really new in terms of qualifications or guidelines. Everything is the mortgage industry, I think, is in a pretty firm state in terms of no real shifts in terms of Fannie, Freddie, or VA or FHA guideline changes. So everything is pretty consistent right now.
Awesome. Thank you again for your
You're
time
welcome.
today.
Thanks for having me.
Guys, thank you so much for joining us today on Mortgage Monday. See you next week. Bye.